Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Monday edition of Benzinga's PreMarket Prep. Spencer Israel here with Joel Elconin and Dennis Dick. On this show today, we've got who saw that finish line headline on Friday. We've got some M&A happening in that stock. We have some M&A rumors in USG. Have some interesting ratings to discuss, mostly from Morgan Stanley, upgrading their price or raising their price target on Microsoft to a street high. We'll talk about all that and take your questions, of course, in our chats on premarket.benzinga.com and on youtube.com/Benzinga TV. Our guest this morning, Ian Weiner. He's the co-head of equities trading at Wedbush Securities. He would join us at 8:35. Joel, how are we doing this morning in the overall markets?
Unbelievable, Spencer. We're trading up 33 handles here at 26.30.75. Caught a bid near that 6 p.m. open, pre-market low 26.91. That's 5 points above Friday's low of 25.86 even. So hard to say that that's the good support because we're almost 40 handles away from that. Coming on the upside, I'm almost out of numbers here. 26.36 is your pre-market high. I'll be looking at that as resistance. Two numbers, 42.25 was Thursday's close. Friday's high, way up at 58.75. We will not see that in today's session. We have crude oil trading in the red by 3 cents at 65.85. We have gold in the red, just struggling with that 1350 level, down $1.30 at 1348.70. And silver up a little over a nickel at 1664. And Bitcoin, that just can't catch a bid. Back in the 8,500 handle. Let me bring up my Bitcoin price here for you. And it is, Bitcoin price is trading at, help me out here, Dennis. What you got for Bitcoin?
I don't keep Bitcoin on my screen. Yes, I can go find it here.
I guess I don't either.
You,
I got it.
I never have Bitcoin. So that's how much I love Bitcoin.
We're down,
I don't even
down
have
4%.
it anywhere close to my screen. I can go bring up a website. The coin market cap says $8,163.
All right, Dennis, how you doing this morning? I know you were putting some hedges on Friday night. What an unbelievable market here. Friday, we're looking in the abyss.
Headline market.
And today, headline market. And we scouring the headlines. I put this in the chat last night. I attribute this rally to Mnuchin, who just came out nonchalantly, gave a headline for truce with China on trade. Oh, yeah, it's like all of a sudden trade war on Friday and no trade war today. How do you handle headlines like that?
I mean, it's difficult, and that's why I trade hedged. This is why I've always been more of a hedged trader to take out the market risk. You know, when you're making a call on your stock, and even if you're just trading, a couple of stocks, sometimes you can do that, and still trade market neutral. I've always traded market neutral. In the last couple of years, you haven't had to really do it. We've been a straight out market. It's been, fairly easy. Honestly, you could just be long coming in every day, and 3 out of 5 days you were making money. It's different now. The market's different. So, we really teach up right trading is to trade market neutral. You're making, if you want a portfolio of long stocks, you like the setups, then you sell some SPY against it because you're making that call. But, if you like the market overall, that's a different story. But if you're just looking at individual stock setups, sometimes it's nicer to trade market neutral. And you take out the headline risk, at least the big macro picture headline risk. And, the 150 traders that are upright trading, most of them trade that way.
All right. And so you see AMD up 0.28%, 3 cents, got a downgrade.
When I look at AMD, I see myself, and I had it long coming in, and somebody would say, "Oh, well, you're up in that. Why are you complaining?" Well, I'm hedged versus Q's beta hedged on it. Some AMD in this market should be up 3%. reason it's not is obvious, and sometimes these things happen. So, but I was just saying, the reason that it's not up is Susquehanna downgraded today to negative, put a $7.50 price target on it. I'm actually surprised it's not red. I sold it here because that's a pretty, big downgrade there. Susquehanna is influential, and $7.50 price target negative, their equivalent of sell. Pretty ugly. I mean, in a normal market, that's going to be down 3%. So it's not surprising that it's, not trading up. But, as a hedge trader, you could say, oh, well, what are you complaining? You're only, you're up actually in the position. But no, because I'm beta hedged, and you see the Qs with the beta, 2.08% is up to Qs. AMD's beta is almost twice that of the Qs. So you look at that and say, well, it should be up 3 to 4% if it wasn't for the downgrade. So actually, I'm down. So I'm the only person that would look at AMD and say I'm down 3% in that right now, despite the stock being up.
Friday's low, that was weak along with the rest of the market. Friday's low, 1057. Had another low in this area, 1063 in February. And then you had a big gap up at the beginning of the year. So it's a downgrade. To me, it's opening in to support the fact that it hasn't moved itself away from this area with such a strong market is not a good sign at all. So keeping an eye.
It's ugly.
Yeah, it could be.
It's been such a bad performer here, and I'm so glad I sold half of my. So I have it in my invest portfolio as well. I had it in my trading portfolio overnight, which I've already sold that position because of the downgrade here from Susquehanna. And just when I'm looking here now at, obviously looking at AMD, my investment portfolio, what's going on, Joey? There's problems today. I can't even bring up a chart on this right now. There it goes. My system's never slow. I've got a brand new computer. Anyways, it's been ugly. I mean, the market really, it never rallied that much with the overall market when we had the wicked rally. And now it's selling off the hardest. So it's been an ugly one.
I got a question for you. Did you cover your Qs on it?
Yeah. Oh, yeah.
Okay.
The Qs are easy. That's the nice thing when you're hedging with Qs or SPY. You got a 1-2 cent market. So when I'm trading market neutral and I've got an overnight, maybe I like to set up. Maybe I did it for an ARB. There's usually just for ARBs. It's different reasons you're doing this type of stuff. And when you have wicked volatility, you can basically do the ARB pretty well. So when I'm long AMD, I'm going to cover the equivalent amount of Qs beta hedged. So what I mean by beta hedged is you got to consider if AMD's beta is twice out of the market, then you're going to put on, half the amount of AMD versus the market. I use the Qs as my hedging vehicle on that. Some people get it more. You could go out and you can use the SOX. You could use some other things as well. But this Windows, man, and now I'm going on a tangent. I get the pop-up. Do you want to restart your computer right now? Hell no. Why the hell would I want to restart my computer 8:08 in the morning when I'm trying to trade? This pops up on me so many times and says restart now. What if I accidentally hit restart now? They're Microsoft, and we're going to move to Microsoft in a second because they're getting a big call from Morgan Stanley here this morning.
Why don't you do that?
You want to go to that?
Yeah.
Okay. So anyway, I was just trying to say, I do beta hedging and stuff. So AMD has been a disappointing stock from an investment standpoint as well. Let's move to Microsoft, though, because Microsoft is up big here this morning. I actually was long it coming in. I have sold that already too here this morning. That was just, overnight arbing as well. 3.5% is trading up here in the pre-market. Spencer, the details here is Microsoft gets a nice lift.
Morgan Stanley is increasing their price target on Microsoft to 130 from 110. That is a street high, I believe.
Boom. Microsoft, huge move here in the pre-market for it. This stock got hit hard in the last 3 or 4 days. Now you're getting a big lift. The price target goes up to 130, which is a street high. It's a big pop here for the stock. Everybody's coming in, but this is the type of market. Let's just sit back and analyze overall. And I think, Joel, you're going to be on the same page as me here. We got annihilated. I mean, annihilated here last week. Now, boom, you're getting half those losses back in Microsoft in one morning. I'm not chasing up here. I mean, yes, it's a great headline, the political headline coming out of the market. Maybe, the worries about a trade war here, maybe, a little bit less here this morning. But these worries are not gone. There's still issues here. The technicals are still broken down on everything. So now you get a big lift to Microsoft, get half the losses back in one day. Tell you, if I was long this thing, I'd be ringing the register right now, I think.
Yeah, you already did. You were long.
Well, I already did. Yeah, you're right. I was long it overnight, but that was our overnight day trades. I'm talking swing trade, or depending on your time horizon, obviously. But I think, you're going to see that in a lot of stocks here today. Some of these stocks getting back half their losses from last week. And I don't know, that's too much too fast, in my opinion. Because I think there's still a lot of things to worry about.
Yeah, 90.69 is your pre-market high. Trading at 90.49. Let's keep an eye on Friday's high. We're right here right now. It's important to hold that level. Friday's high was 90.46. I mean, your 2-day high is 91.75, but you're just not going to see that today. I'm fairly confident that we're not going to stick another buck on it, even though the SPOOs are continuing to rally here. I don't know. Keep an eye on the pre-market high. If it keeps on going, maybe look for some size at 91 here. Huge move, getting most about half of the gains or half of the losses from last week, but big move and going with the market here. So congratulations, those that are long. Microsoft.
We're lifting again right
I know.
now. This market is on fire. Fire, Joel.
Yeah, the SPOOs are right back up at the highs of the session. But Dennis, I have a statistic for you. And if you short Microsoft up 330 on an open, if you short it until noon, you will make money 98% of the time.
Joel's made up statistics. I don't know. I'm coming in here and shorting Microsoft, but I'm just saying if you were long, and just think about, okay, you got to think from the money manager perspective too. You know, what's the big money going to do? You look at this Microsoft chart, you bring it up on a weekly. That candle from last week is awful looking on the weekly chart. So if you're just a purely technical trader and just ignoring headlines, and now you get the lift back, the bounce back, the whip, the dead cat bounce, whatever you want to call it. I mean, this is going to happen in so many stocks. I just think money's going to lighten up. I think money, was very heavily invested, got hit really hard last week. And, even in my investment portfolio, like I'm not fully invested, I'm a little bit underinvested, but I think about this pop and I'm like, man, if I think we're still might be continuing down here, this is a nice opportunity to get a lot of my losses back from last week.
Yeah, and I think this rally is happening so you don't lose the square bet. Stargazer is mentioning here. Got hit on Friday, and I like the way Stargazer's thinking here. Let's look at the recent move that you just had. You made that all-time high at 58.46. Just made a low at 51.12. Let's just call that a 7-point rally. Add 3.5 to that. That's 54.12. 54.5, 55 area. Boom. Out with both palms in that one. But I got close on Friday. 50. What do I need? 50, 59 or something like that? Did you write that down in square?
You got close. I got close, and you got close here. You need to go to 49.50 though, so you didn't get as close as I did. I got a buck away. You were almost $2 away still.
I did. I thought it was.
Let's pop back. We're right back to the middle. This is one. You know what? You want to take off the bet? Are you nervous about it still? We're right in the middle here now. You look a lot better right now. But
so what are you proposing?
Relative strength.
What are you proposing?
I don't know.
Just call it off the bat?
Anything. I'm just asking your opinion if you would like to take it off.
No.
The bet.
No.
It's 49.50 versus 59.50. We know, and 2 days later, I almost got there, but Joel blocked me up at 58.46. So now we're down here.
I'm no way.
67 close.
I'd rather
you're holding on to it. You're going for it.
I'd rather lose a beer.
Even in this wicked rally here, maybe Square's going to see 59.5 today.
All right, here we go again.
This snapback rally here on everything. Square, same story. You look at this chart, broke through the 55. Everything looks broken. So that's why when you get this nice pop back, I'm like, wow, it's like a gift. Feels like a gift. It doesn't feel like this is the start of, the next bull run here.
No way.
It feels like this is a gift. Doesn't it feel that way to you?
It's not this is not a healthy rally. This is when you do this.
Well, it's a very healthy rally over there.
No.
You tell anybody who's long it's not a healthy rally when they come in and the Dow's going to be up, 600 points or 400 points or whatever the hell it's going to be.
Yeah, then what about when we go negative on the session? Then
you know what? I don't think we're going negative on the session here, but I still think there's going to be some big money looking to lighten up into this rally. So I'm on the same side as you, Joel.
Okay.
You know that. I'm on the same side as you on this one. So you're not going to get me on any bets here because I feel like, we're on the same side here today. I think this is just a, and snapback rally. Ed Parker's calling it. Yeah, I think it is. I think everybody's excited on this headline. People coming in, I don't want to miss it. They're coming in as early as they can. But if you're buying up here now, you kind of already did miss it. I mean, there's stocks trading up 3-4% here this morning. So, and other stocks trading up a lot more than that. Finish Line, for instance, and speaking of Finish Line, Did you see finish line on Friday?
No, I wish I would have gotten a memo. Did you get the memo?
Look, I didn't get the memo either, but the stock opens. Okay, you could say Nike had earnings, so you figure finish line, may have a good day. Nike gave all of its gains back, which we talked about on the show. We specifically said, Nike up here, we'd probably be selling into that rally. I think that was what we said, and it came all the way back. Let's talk finish line, though. FINL opens at the low that day at 995, closes almost at the high in the worst possible tape. The worst tape you could possibly get. Everything got killed on Friday. Now, they were slaughtering stocks left, right, and center. Here's a stock that closes up 5% on the day and now gets taken over the weekend. Somebody knew something on Friday. So anyways, with the stock closing, trading that strong on Friday. So give us the news here, Spencer, this morning. Finish line trading up 30%. The smart people who bought on Friday into that wicked sell-off on the overall market obviously are getting rewarded here today. Smart or informed. Anyways, finish line.
Or maybe just lucky. You don't know. JD Sports.
Well, there's a few lucky people in there probably. So
Okay.
We should say not everybody that bought that stock on Friday is an insider, but there's some people that knew something.
JD Sports, a British retail firm, taking now finish line for $13.50 a share in cash.
And you know what's interesting? Spencer actually saying it's all cash. It's trading above that price. It's $13.69 right now in the pre. What do you think? Finish line's going to get a better bid? Is that right, or is there some stock?
Some caveat in there? No.
Is it just cash? Pure cash?
I'm reading through the release right now.
It looks to me like it's just cash too.
Yes, I think it is just cash.
I'm just looking too. $13.50. Yeah, cash done. I agree with you. One.
Yeah,
so
it's a private equity.
Somebody thinks getting a better price. I don't know. I don't know who's coming in here. I didn't think anybody's coming and buying finish line, so I think they'll just be happy they got a price. Shocking to me that's $13.69, but whatever. This market gets excited. They think there's going to be another bidder. The takeout price is $13.50, so it looks like 19 cents too high to me.
Any sympathy plays with this?
You know what? Yeah, I will. I'll say that. And obviously a lot of stocks are going to be up here today, but there's a lot of shoe retailers, mall retailers that have absolutely been annihilated. So could this be a comeback, story? Now that one gets acquired, does this kickstart some of the other ones? I mean, you could think of like a DSW. You could think of like a Foot Locker. There's just a ton of them you could go into. And then if you want to even spread it over into other retailers, I mean, all these mall retailers, did you see? And then L Brands has nothing to do with shoes. I'm just talking mall retailers here. Have you seen L Brands? L Brands, which everybody had to buy at the end of the year when it went from $37 up to over $60, has now given it all back. The entire gain is back down here in the mid 30s, $37, and is now trading with that yield again, 6.39%. So I don't know, man. I don't know if that's what's going to happen, if you're going to start to see a bid happen in some of these other stocks, but they seem to be buying everything across the board. Why not buy some of these, beat up retailers here if you think there's the potential that, maybe some of the other ones get scooped up on the cheap?
You might be licking your chops on this one, huh? If it continues to move lower, trading up 7 cents. You had all those lows at the $36 area. The former low of the move was 35. Even a lot of downward momentum going in this one, but definitely starting to reach some long-time support here in finish line. In L Brands. We also looked at DSW for our DSW traders. Boy, the last 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 times you got over 22, you just couldn't hold. But if in fact you break out over 22 and you hold early, there could be a nice move in there. Foot Locker, we mentioned. How's the chart looking in that one? Foot Locker. Ooh, where's that, Dennis? Bid offer? What do you got for me in Foot Locker?
Bid $44.20, so it is going to be up 50 cents at least. I think with this headline, it could be up even more than that. Nobody's hitting the 44.20. I will tell you, though, Foot Locker, 45. That's the level. This is a Harlan Pine chart here, because he'll look at a chart and he'll say, what level jumps out at you when you look at the chart, in the first second. And you look at this chart on the dailies and you say, whoa, 45, major support in December, January, February. Took it out, obviously, and now it's found major resistance the last couple of weeks, just under 45. So major resistance up here, over 45, it starts getting interesting. Looks like a breakout, but hard to buy it into that heavy resistance.
Yeah, 44.70 would fill your gap. That was from March 1st. Boy, that was a bad day on March 2nd and went from 45.88 to 40.04. So keep an eye. 44.70 would fill the gap in that issue.
Just jump over to a few other stocks that are in the news. There's one other one that's got, is this an official takeover? Is this rumors? USG, what's up?
This is not an official takeover. This is a report. So it's two things. It's a report of a stake by Berkshire, a 30.8% stake in USG.
Wow.
They also said that NALF Entities has submitted a bid at $42.
Okay, so they got a bid on the table. And Warren, obviously, is in this stock here. He bought 30% stake in it. When did Warren buy that? It just got disclosed?
Yeah, they...
Look at Warren informed here.
I think they just confirmed it over the weekend.
Informed Warren Buffett.
Wow. I think they just confirmed it over the weekend.
Did he just buy this right now with this 30%? Like, is he part of this, group here, or was this just?
I don't know.
I didn't read the headline, so let me go check out the headline as well.
I honestly don't know if they're part.
It'd be interesting. Warren bought 30%. Now all of a sudden they get a bid, or he's probably part of this. Maybe he's part of this Berkshire Hathaway. So Warren's pretty clean, so I'd imagine he's probably part of this. So up 20% this morning, big pop.
If it wasn't for that $42 bid on the table, I would just have palms out here at 40.34, 40.35.
So much resistance up there.
Yeah. January 26th, a high 40.33. January 29th, 40.34. Currently trading at 40.06, up $6.54. I mean, it's hard to get real aggressive if there's a potential, $42 bid on the table. But the pre-market charts are confirming. Someone is skeptical like me of this bid. Pre-market high 40.50. So unless a bid comes out on that pretty quickly, this could definitely back and fill. But nice move there. Good timing. I wish I could buy 33% of something and have it open up $6.50 higher or 20%.
Well, that's Warren. That's the benefit of being Warren Buffett. So anyways, it's a nice benefit of every major hedge fund manager that's widely followed. None more than Warren Buffett, though. I mean, we've said that before. You can buy a stock 45 days later or whatever, it's going to get disclosed and it's going to go up 3 or 4% because Warren Buffett. So they're always up 3 or 4% before they even start. It's a nice lead that they always get. But you can buy Berkshire Hathaway stock and you can participate in all that lead. Obviously, you have to pay a big premium, the Warren Buffett premium in there, which is why I don't own any Berkshire Hathaway, because the guy's not getting any younger. And I don't know when the day he gets sick or, something else happens to him, if a lot of that premium comes out of Berkshire, because it does trade substantially above what the net asset values are. I haven't calculated that lately, but I remember it being significantly above. Same thing goes for Icon and Carl, IEP. I mean, he's older too. So when he, obviously, has an issues or health issues, which inevitably come when you're in your 80s, you wonder if some of that premium doesn't suck out of it. So, IEP at last time I looked was trading above 60 or 60% above its NAV. So it's, big premium paid to invest along with those guys.
All right. Josh Nuno, last time they said Buffett bought something, it was a rumor and he denied it. But I think we have pretty good confirmation here that Buffett did take the stake. I'm not sure about the takeover rumors. SPOOs just ran up to 37.75 and 37.50 met your 9-day average trading range of 46.5 handles. So already in the pre-market session, we've already traded our 9-day average trading range, and back at 26.34 after that bump to 37.75.
Let's jump over to ratings land here. We talked AMD briefly. We talked Microsoft. There's a lot of ratings here today, Spencer. There's not that many, that are really jumping up besides Microsoft, AMD, but there's a lot of them. You were saying a note from Morgan Stanley. Looks like they're doing a little pair trade in the food stocks.
Yep, Morgan had, let me get to Morgan in my calendar here. Yep, they had upgraded QSR restaurant brands, upgraded them to outperform, and then simultaneously downgraded Jack in the Box to equal weight. I'm sorry, they upgraded to overweight. They downgrade to equal weight. So that's the...
Okay, so they're downgrading Jack in the Box. They're upgrading QSR.
Correct.
What's QSR own? They own a bunch of stuff.
Tim Hortons and Burger King.
They're Tim Hortons and Burger King. Okay, so I give QSR a lot of money because my wife likes to buy coffee there. Anyways, QSR. That stock's trade up $1.50 here in the pre-market. It's a nice pop. We know these food stocks have just been completely out of favor. Even the restaurant stocks have not been in favor here as of late. I see all kinds of resistance up here, 58.5 to 60. Looks like a brick wall of resistance. If I was in this thing and this thing gets anywhere near $60, I'd ring the register.
And we have trading up $1.49 at $58 at the pre-market. Pair of highs just under 60 at 59.62, 59.67. Let's go to the pre-market chart here. See if we can get any confirmation of these levels. And what do we got on the 15-minute chart? We need to go after hours. Kind of quiet, but trading at 58, up $1
There's nothing. Yeah, so it's only 100 shares have traded here in the pre-market from the upgrade. That's up, 2.6%. I see the offer up at 59.78. I think there's a wall of offers up at 60. I almost want to go look at the book and see if there's anything in there, because I bet you, anywhere up there near 60, you're going to find a wall of sellers. So I think it's a good opportunity, from the short side, if this thing gets up near $60. And so playing it from the short side in the upper 59s.
Well, I just Stargazer is just making a great point here. How about the Target Kroger rumors? That was on Friday, right?
Well, we said that was ridiculous. I think we were one of the first to say it. And then obviously Kramer came out saying at CNBC, he was saying the same thing. I mean, everybody was thinking it, but our show's earlier than a lot of other people's. So we were saying, full disclosure, well, I tried to play from the short side. I actually did make some money. I think I was playing Kroger. I did short Kroger. I covered way too soon, but it gave it all back. I mean, it was just a ridiculous rumor. It wasn't going to materialize. And, Kramer came and really squashed it. CNBC, officially squashed it at around 9:05 that morning. They, Faber said his sources said there's nothing here. And then the stock really tanked after that. But there was no way Target and Kroger were merging. That was silly. So Kroger was trading up, I think, near $25 in the pre-market, wasn't it? That was just a gift. That was a gift in a stock that's been absolutely annihilated. Target, same story. It was a gift. And, some people took the gift. And obviously, a lot of other people, anybody who bought it up there wasn't listening to our show because we didn't think there was much to it.
Let's take a look for Soho. He doesn't ask us a lot about many individual issues, but how about this Boeing chart here? You're looking at the abyss, breaking down through 320, right? You have all these lows, 318.32, 319.01. Then you had three other lows at the 320 area. And
huge
then,
support.
And then what happens? What happens? Boom.
We got to get a macro headline, and boom, we bounce right off support.
Right. And
but you know what's interesting here? The last 2 days, Joel, we have a setup here where we could have, maybe not the third day, but here are the last 2 days ranges, 319 to 332.68. And then yesterday or Friday, 318 to 331. We basically have coinciding highs and lows. For a $300 stock, pretty damn close. We're going to open up right into those highs again. So there's a shot here at 331, 332. This market starts rolling over. I kind of like it from the short side. Depends on what the overall market does. I mean, if we keep screaming higher here and it's going to be, buy everything back day that we lost last week, that's a different story. But I'm still tending to look at shorts here into this rally. So I'm playing contrarian here.
And you don't have to worry about getting me on board when you come to contrarian thinking here. I mean,
Joel's got that contrarian and will never leave Joel's blood.
The math, though, Dennis, the math is telling you that this rally can't hold. It's just the math.
Well, anything can happen. So you never want to get into a situation where you say something can happen. But all it is as traders, we live in the probabilities. And, I'm all about the math, figuring stuff out. I'm at math to an extreme, and I'm telling you AMD is down 3% today, and it's actually up 0.47%. It's mind-boggling math there. But the funky, quant math here coming at you. But, going back here, it is all math. It's all numbers. And, you got to look at what everything is moving kind of with the overall market right now. Boeing has a bigger beta than the market. So if you're just, before I even looked at Boeing, at the chart, I see the S&P up 1.7%. I know right away Boeing's going to probably be up 3%. Where is it? It's up 2.99% in the pre-market. So it's already priced to where it should be with fair value because its beta is more in the market right now. Now, that being said, market starts to roll over. This Boeing is a nice setup. So you've got to respect where the market is, but you also have to respect where Boeing is. And Boeing is at a little double top from the last 2 days.
Yeah. So let's
Big resistance.
Yeah, I mean, opening print could be another cue too. If you get the open, you get a little bump up, 50, 60, 70 cents, and then you come down through that open. And, maybe a short there with a stop at, the high of that first bracket for whatever time frame you are using. Dennis, just tell me about all the buying balances that we have here. Everyone's selling on Friday and now they're buying today. What do you got in balance land?
They are mostly buys. Obviously, when we're up this much, they're going to be mostly buys. You'll be scrambling to find a sell imbalance here this morning. But, if I want to give you some highlights here, Square, 66,000 to buy. Alibaba, 59,000 to buy. Very early here yet, so they're small. Bank of America, they just posted here at 8:30. Bank of America, 250,000 to buy. Bank of America off to the races here this morning. It's up 2.6% here now, bumping its head up against the $30 psychological level, which it just pierced through like butter on Friday. So getting a nice snapback rally in all the banks this morning. Banks are relatively strong. TLT is down here today. That helps the banks even further. So banks, you would think, are probably going to be up, about 1.5 times what the market is. So, which is what they're doing this morning. So Bank of America trading up 2.6%, market's up 1.72%. It's actually a little bit light. I think almost Bank of America, well, that's about right. It's about right. So Citigroup, same thing, 2.2%. Goldman Sachs trading up $5 in the pre-market, small buy and balance there as well. Berkshire Hathaway has a buy and balance of 51,000 shares this morning. That's pretty substantial for Berk. Again, it's early on these numbers though, but they're going to continue to grow when you have a market that is up as much as we are this morning.
Just talk a little bit about the Dropbox IPO, Dennis. Did you participate?
Yeah, you know what? There were some people saying it was going to double from the opening price. I said on the show, I didn't think it was going to even, do remotely that. It went higher than I thought it would. I think the IPO was 21. It ended up closing at 28.48 in a terrible tape. It is bouncing back here this morning. So, it's hard to talk technicals on a stock that's traded for one day. All you have is one level, 27.84. That's the low from Friday, and then you have 31.60 high. So those are the two levels you're going to trade. It starts to take out 31.60. You start thinking maybe we could go higher. It pierces that low of the day on Friday, 27.84. Then you get nervous. We're trading right in the middle here right now. Technically speaking, I don't see any trade here at all.
I can give you the daily pivot at 29.31, and we're trading up 50 cents above that. So if you're looking to buy this on a pullback, your pivot's 29.30. I just want to give it a whole lot of room. If it took that out, the low from Friday, 27.84. And, something tells me 29 was your opening print on Friday, and then you ran up as high as 31.60, down to 20. I think 30 is going to be the number. I know it's early to start giving technical numbers, but it's the only, it's the only round.
Way too early. Yeah. But yeah, you could say a psychological.
$30.
That listed in New York?
Yeah. Yep.
Was it listed in New York? No, it's NASDAQ. It's NASDAQ.
No,
I was going to see if there's anything in the book. It is NASDAQ. I know they throw it out with us because it used to be back in the day, back in Joel and mine day, it was always 3 symbols, New York, 4 symbols, NASDAQ. But they've thrown all that out the window. They don't make it simple like that anymore. So you see 3 symbols, it might be on the NASDAQ. So I always liked it back then. When the listing was, you knew right away. 4 symbols was on NASDAQ. 3 symbols, it was on the NYSE. But now you got other exchanges. Obviously 2 main ones still are just NASDAQ and NYSE. But we know they list. They don't follow that system anymore, which was a nice system.
Stock Hunter wants to know: would someone please explain the fundamental thesis on Square SQ? Don't know why it's so loved. I can't believe my Facebook. I hope you're still around because you're the one that loves that stock, and you just put a quick explanation on why it's loved so much. I mean, they talked about it being a Bitcoin play, but
no, really, it's not a Bitcoin play.
A platform,
but everybody's using those things. I mean, it's a payment processor play that is used by so many smaller retailers there. So the growth is there. There's huge growth, and this market is hungry for growth. Now, the reason I don't own in my invest portfolio is the valuation's crazy, and we know I'm more of a value guy, but the growth guys love this stock. So that's the difference. The growth guys love it, and that's why it continues to, outperform the market. And yes, it got hit last week. Everything with a higher beta, everything with a higher multiple got hit hard last week, but it's still, I'd say as long as it's above 50, bulls are still in control here, and that's why I'm still sticking with my bet with Joel, 59.5 versus 49.5. As long as it's above 50, I think, it could test all-time highs here again. So staying on the bull train on Square, even though I don't own any, below $50, I'd be concerned.
All right, 8:35. We're going to take our only break of the day and grab our guest, Ian Weiner, co-head of equity trading at Wedbush Securities. He was quoted this weekend in Barron's. We'll talk to him about his thoughts on anything. He's pretty good about everything in the market. So we'll be right back with Ian Weiner.
Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by Benzinga Pro. I'm your co-host, Joel Elconin, along with Dennis Dick. Spencer Israel working the boards, and we are joined by Ian Weiner. He's Director of Equity Trading at Wedbush Securities. Ian, how you doing on this Monday morning?
I'm doing great. How are you guys?
Good. Well, I just want to thank you for being part of that raucous crowd there at Staples Center, cheering on my Michigan Wolverines to the Final Four.
Of course. It was the happiest moment of my entire weekend, seeing Michigan get there.
Okay. All right. First, I just want to ask you just kind of like a general question here. Being Director of Equity Trading at Wedbush Securities, you're dealing with, wealthy individual investors, institutions, and everything. And they're rigging you off the hook on Friday, and they're saying, what is going on here? We're going to test the lows of the move. I need to sell everything. This market's coming down. I mean, you have to have long-term perspectives on the market. Then you turn around. Just tell us how dealing with the institutions and large customers. They're probably not that trigger happy, but on a day like Friday, going into a long weekend, some certainly had to be showing some concern.
Yeah, I mean, investors were concerned. I think that, it's really a question of whether you think that all this rhetoric is going to happen or not. And I think what happened on Friday was you just had sort of a confluence of events, whether it was the fears of the trade war, whether it was the whole Stormy Daniels interview, whether it was, just overall concern for the recent appointments in the cabinet, all that stuff. And what you got was, people sort of taking down risk into the weekend, and people shorting futures in order to kind of hedge out their books. So, we've seen this multiple times where people get worried, hedge their books, and then when the world doesn't end, they come in on Monday morning and they basically cover all their hedges, and that's why you get this spike.
Do you think? I mean, are your customers, are they using the futures? I mean, because if you were hedging a lot and on the short side here and dumping equities, boy oh boy, or maybe they were keeping some equities assuring the spoos here. I mean, how much are they using the S&Ps, the overnight markets to set hedges or to offset hedges?
I think quite a bit. I mean, if you look at the volumes in individual stocks, with the exception of a few notable names that had sort of idiosyncratic situations like Facebook, it wasn't that big. So I think a lot of times, people look for the quickest way, and the quickest way tends to be S&P futures, and that's what we saw.
Okay. All right. It's always nice when I have a guest on Monday morning to pick up my Barron's and see it quoted in Barron's. And you're not the only one that's talking about the LIBOR rate here. And there is a concern over interest rates. The LIBOR rate, many corporations are tied, $2 trillion in debt tied to that. Also, a lot of home mortgages. Boy, oh boy, let's talk about the LIBOR rate, the move that it made last week, and the future implications. I mean, the LIBOR rate's not going to go right back down today. And obviously, rising interest rates have been a concern for the market. Please outline that for us.
Well, so basically it's just a measure of sort of short-term funding rates. And when it tightens up as it did and goes higher, it just historically has signaled, tightening monetary conditions. And so when you have tightening monetary conditions, it gets harder, on any sort of adjustable rate product. And in the past, I think people got alarmed because right before the market tanked, a decade ago, that's what we started to see. So the true bears were looking at that and saying, oh, what's LIBOR telling us? I think the reality is you're seeing that move based on the fact that there's been this willingness to blow out the deficit, and the Treasury needs to fund a lot of short-term activity. And that's been pushing up LIBOR because they've been selling a lot of bonds. And so it still has the same effect on companies, but from a sort of rate perspective, I think psychologically people are not looking at it the same because it's more of a technical thing than necessarily meaning that all of a sudden credit seizing up on people. There is an issue in the sense that consumer debt is at an all-time high. Auto debt all-time high, student loan debt all-time high, and as those rates go up, anything tied to those rates, which a lot of them are, goes up as well, and it just becomes harder and harder to pay down that principal and the interest. So it is something to keep an eye on, but I don't think it's necessarily an indication that we're going to enter into another 2008-9 situation.
Yeah, the Fed has pretty much laid out their course. They didn't really come with the half rate bump that people were worried about, and 3 or 4 is still kind of still to be determined. So we'll definitely keep an eye on that LIBOR rate. Just real quickly, going back, you were one of the staunch bears out there in Bitcoin. Made a lot of comparisons. I saw some of your interviews on CNBC and stuff. It's kind of settled down out of the spotlight now. Blockchain technology. Any thoughts on Bitcoin? If there's any chance for survival, I wouldn't say survival, but alternative currencies, alternative money. Any thoughts on that?
Yeah, I think that the way I'm looking at Bitcoin is very similar, and cryptocurrency in general is very similar to the way that I looked at other technologies that had a lot of excitement and then sort of faded a little bit, and then all of a sudden there were a few things that survived and they went on to thrive. Now I don't know which one it is. I don't know what Bitcoin is worth, but is Bitcoin going to be around in 5 to 10 years? Yeah, probably. But, so was fiber, so was a lot of internet stories. So there was plenty of things that happened that made sense and eventually survived. But the underlying sort of multiple instruments that people were using out of the gates to play, many of them didn't survive. So, we've all heard of the pets.com, but even if you look at back in 2000, there was all this excitement about people laying fiber all over the universe, and you saw stocks like JDSU and Corning and all these other names that were involved in that stuff go absolutely crazy. 10 years later, JDSU and a lot of those other stocks kind of really came back to earth in a big way and almost went out of business. And so I think you got the same situation with crypto, where any of the stocks really related to crypto, are probably not worth much. And the underlying sort of instrument of Bitcoin, I don't know what it's worth, but if it went to 1,000, that doesn't mean that it's not a viable technology. It's just a question of what exactly, should it be trading at? And I think that the most interesting thing that you saw was all of a sudden miners saying, well, it's not worth it anymore. It costs too much to make relative to what I could sell it for. That's an indication that, you're kind of getting to that equilibrium level. And, eventually we'll see what happens. The other interesting thing is you look at who makes the chips to mine this stuff, and AMD or NVIDIA, and as the chips move from sort of a specialized chip to a more generalized ASIC, that's going to make the production cheaper. So you may actually see more supply of Bitcoin come online, which should depress the price a little bit more.
And moving on to stocks related to it. I don't know if you want to talk about any individual one stock. Soho 196 is, asking like a stock like Longfin here, went parabolic to 140 and came back. Are you seeing any interest in these Bitcoin related stocks?
Not much anymore. I think that game sort of ended. It was great for a couple of weeks when guys would change names, but it's a lot of these companies are a joke. And the SEC's figured that out. It took them a little while, but I'm not really sure what these companies do other than change their name. And once people figure out, what it is, look, to be fair, even CNBC figured out Riot Act was not a real company, and so once they're on the case, you can tell it's sort of the ninth inning. And so I wouldn't be surprised to see, all of these stocks sort of return to kind of levels they were pre-announcement, which is still actually significantly lower than where they are right now.
Trading the news and interpreting the news can be a very difficult thing. Owners, shareholders of Facebook last week caught in many negative headlines here, came down and has come down substantially here. Any thoughts on the way, institutions versus retail traders react to these kind of news? Any long-term thoughts on Facebook?
Yeah, I think Facebook falls into the same category as a lot of these other situations like Volkswagen, Equifax, even British Petroleum, where everybody all of a sudden says it's over. And then at the end of the day, you realize that it's not over. They may have to change a little bit of what they're doing, but you're still talking about a company that has 2 billion users. There's only 7.5 billion people on the planet. And so if you're an advertiser, where are you going to go to get that scale? I'm not really sure where you're going to go. What's the alternative?
Google.
So I don't see advertisers changing their venue. You saw the volume. For your traders out there that watch the show, the stocks turned over almost 25% of the float in the last 4 days. That is an enormous amount of stock to trade for a company this size. And so because of that, I would not be surprised that you get this sort of vacuum back up to the 170, 175 level because people who wanted to sell have sold. The guys buying the stock are probably more kind of GARP types who aren't going to sell it on the first rally. So I actually think here to 150 is a tremendous entry point for the stock. And there'll be negative headlines and, Zuckerberg will be in front of Congress and everybody will be like, wow, what's going to happen? But I just see this as another situation where everybody calls for it's the end, and then guess what? It's not the end, and it's still growing pretty significantly, and it'll come back.
You go to Google. That's the answer, Ian. You go to the other dominant ad platform, right?
Well, maybe, but still, even with Google, if you're worried about Facebook, then you probably should have some of the similar concerns about Google as far as dominant market share and ability to influence. So, I still think that there's enough advertising dollars out there that both Google and Facebook can win. I suppose that there's a reason to buy Google if you're selling Facebook, but I actually think more people, if they're really concerned about Facebook, would be better off buying an Amazon.
All right, and just real quick, any comments on the commodities markets? You've had a very nice run in oil. Oil companies seem to be lagging the move here, but commodities once again are tied to interest rates here. So just any general comments on the commodities markets?
Well, if you look at oil, it's very difficult, from day to day to figure out sort of what the supply demand is. I think that people are using it as a proxy for kind of global tension at this point. And believe it or not, I think that the John Bolton, sort of inclusion in the president's White House now is probably more of upward pressure on oil than anything else. I don't know how many people think that, but to me, he represents a much more hawkish tone towards the Middle East. And if you get that, you're going to get upward prices. And I think it's in the Saudis' interest. It's in a lot of people's interest to see oil go higher there. So that to me is sort of the biggest pressure on that.
All right, before we let you go here, we've had a lot of recent volatility in the market. We hit that all-time high in late January, came down to the early February lows, and kind of just developing a trading range here. 2,800 kind of capped the last rally, trying to find some support here at 2,600. If you could use one word or a phrase, to describe your outlook for the market here, maybe going into the next earnings season, what would that word or phrase be?
Caution, because I think you have a situation where it's going to be interesting. I'm looking for the first company that comes out and says that tariffs or something is changing their input costs. And as a result, their margins going forward are something they're concerned about. And if you get companies that start to say that, whether it's the autos or some of these other companies that use steel and some other things, that's where people are going to start to get a little bit more concerned. And, you've had the benefit of tax reform. I mean, it's come and gone. So now it's really about sort of revenue growth and outlook for 18 and 19. And so, I think that's where I would be. I would be cautious on earnings and really make sure that if I'm owning a name, there is clear growth, because that is the only thing that's going to matter as rates go higher and the economy. People get, if there's doubts about the economy, you want to own names that have clear growth. And, I think Amazon certainly is probably at the top of that list.
Ian Weiner, co-head of equity trading at Wedbush Securities. Ian, thanks so much for the time this morning. Have a good one.
Thank you very much, guys. Take care.
S&P futures still up 35 handles at 2632.75. Your pre-market high stands at 2637.75. Above that, Thursday's close. I'm sure a lot of people would like to see that at 42 and a quarter. Coming back on the downside, I don't see any mid-range support coming into 2624. All right, Dennis.
Just breaking right now, USG rejects the bid from Canaf, or however the hell you say it. USG starting to get hit here in the pre-market just a little bit. It was trading up at 40.75. It's now 40.50, so they're hitting it a little bit here. This just crossed the tape, the PR Newswire there, so I don't think it's been said by CNBC or anything yet here. So could see a little bit of pressure here as they did reject it. But I mean, $42 bid, obviously, it was rejected here. So, but, they think they're worth more. So it depends on how you interpret that. But I don't think it's a great headline for the stock.
Larry Glickman's bringing up PTGX here. Do we have any breaking news on that? Trading down substantially, $12.13 at $8.30. What do you got for me?
Yeah, they discontinued a study, phase 2B PROPEL trial for the treatment of ulcerative colitis. So they discontinued the trial, which is never a positive headline.
Nope. And that stock is just getting the beats here. Just printed $8 and doesn't look like we're showing any signs of life here. But we can go to the monthly charts. And we can find out that the all-time low in the issue was $8. So if you've been looking to cover a short at this one, at the all-time low of $8 made in May of 2017, this is your opportunity. I don't know. Offered at 8 probably here. Dennis, any thoughts on PTGX?
This is too small of a company. I don't follow the story here. This is obviously just off fundamental headlines. Stock's down 60% here today. I will say it seems like the majority of the time when you come in here and you think, hey, these things are, on the cheap, a lot of times it gets cheaper. And, I've tried to play in my invest portfolio. I've tried to play some stocks this way before. Worst story for me was doing TTPH, the stock. And I thought, well, it went from 40 to under $10 in one day. You can see it on the chart back in 2015, September 2015. I stuck a little bit of my invest portfolio, and I thought, maybe we're going to bounce back eventually. We did a little bit, but since then it's just continued to collapse. So some of these smaller one-trick ponies, when they get absolutely slaughtered, when you look at them a year later, they're often lower. Some of them do come back. It's important to follow the individual story, though, and I don't follow the individual story, so it's hard for me to speculate on whether it's going to be one of those bounce back stocks or not. I'll just say the majority of them don't bounce back.
All right. That's just interesting bearings this weekend. We mentioned Ian Wire was in there talking about interest rates here. Couple other quick stories in there. Of course, folks, I want to mention Lazy Boy gets a positive article in here looking for this consumer. What do we call it today, Spencer?
Consumer cyclical?
Yeah, consumer cyclical here. A lot of bullish comments on that one. Dennis, are you seeing any? I see it trading up 75 cents. Any pre-market action?
It's bid. So your bid at 29.05, 29.50 is where it's traded. So obviously they do like the headline from Barron's there. Best offer is way up at $32. So this is a thin market. 32 is like the Rock of Gibraltar up there. It gets anywhere near there, I'll be playing it from the short side. So upper 31s, love it. I like it from the short side. $30, it kind of in the middle of nowhere, is a positive article. I think you're running into overhead supply higher, though. So as you get up over $31, I think there's sellers all over the place. I don't even know. We might even struggle at 30 here this morning. Maybe the Barron's article can push us to the psychological level of 30, but it's tough sledding above 31.
This one you might have a little interest in. That's something we've been talking about a long time. The AT&T Time Warner rumors here. Barron's is saying investors face a win-win here. You could see a quick 10% pop if that deal comes through at AT&T. If the deal is blocked, investors are likely to see even more of a rise next year. I know you like to trade these, from a risk-reward standpoint, and it never really got down near that $75, 80 level where it was before. Little too much risk here.
We talked about this, and I analyzed this last week from the risk reward perspective there, and I said I didn't mind it here. The reason being is that a lot of your traditional media companies have come back from those lows. I mean, look at Viacom. This is, Time Warner is a better company than Viacom, but if you look at where VIAB was back in the summer, we were down at $22. We've come a long ways back. There's a lot of other ones. Fox, obviously, that had some assets acquired there. But, a lot of these traditional media companies have come a long ways back. So you could argue that, hey, Time Warner might be at $92 even without a bid. So even if, that doesn't, even if the merger doesn't go through, I don't know how much downside is there. But then I argue that on Qualcomm, and Qualcomm has continued to go down. So, sometimes it works, sometimes it doesn't. But, I don't mind the risk reward at $92, $93 on Time Warner. The only thing is I don't own it because I don't like the traditional media companies at all. I just don't like the space. But I'd rather be in a Time Warner than some of these other media companies. So I think a better one. So I can get on board with the article a little bit. That being said, this is still a risk arb play. It's still AT&T and Time Warner. It's still the risk arbs controlling it there. So when Time Warner is up 2.5% here this morning, and I see AT&T only up 1%, I think there's that natural possibility that spread could close a little bit. It's 1.5% there from the Barron's article. So I don't know if you're going to see this, all of a sudden start taking on 95, 96, 97 off this Barron's piece. I would imagine when you look at this at the end of the day, it's probably going to be trading off of AT&T again.
All right. And any final thoughts here? We have began to
wild. Yeah, the markets are just wild right now. And, if you're new to the market, what you got to do in this type of market is back off your size. I mean, if you're a newer trader, let's say you've just started in the last couple of years, you're not used to all this volatility. We've been seeing the VIX down here at like 10 forever. Now we're at 22. We popped up over, 30 a little while ago. When the VIX starts double, triple, and, you don't know about these markets, you don't know how to trade them, we'll treat it like you just started here again. And this is just for newer traders who haven't been through, whipsaw markets when the VIX is higher. Like I've traded through the tech bubble, I've traded through the financial crisis. So I don't decrease my size. I actually sometimes increase my size in this type of markets because there's a lot of money to be made. But you've got to be able to control the risk too. And if you're newer to the market, just BTFDing everything, may not work this time. So you got to be careful. And if you're losing some money, it's not working well for you, back off your size a little bit. Trade a little bit smaller till you get a feel for it, because it's a different trading environment we're in now. It's not just the environment we can buy every dip and it's going to come back. I think it's a little bit different here now. You got to be better with your selection, and you got to be cautious. And you got to have outs. Before people just buy the dip and they'll say, well, I'll wait till it comes back because I know it's going to come back. Well, that's worked for most stocks in the last 7 years. But I'll tell you, in the long term, they don't always come back. So you always have to have an out. That's with anything with trading. I always think about, where I'm getting out of the position if my call is wrong.
And just great chat going on here between Stock Hunter and I can't believe my Facebook. ICF, a big bull in square, talking about some of his positions. And Stock Hunter takes the point that thanks for the trade idea. He's going to day trade it for now and get a feel from the order flow, and see how it trades. And I don't know, today might be a little bit tough idea to get an idea on the order flow, but
it's a wild child. I day trade square, and I trade it in half of my normal size because it is a wild child. So if you're used to trading, I don't know, like I'm just throwing up hypothetical examples there, but if you're used to trading with, $10,000 in something, throw $5,000 in it, a little bit less in square, because it moves. It moves just a lot. So you can make big money, but you can lose big money too. You got to control the risk though. So that's the big thing in square, is you got to find ways to control the risk. You lose 50 cents in like 5 seconds in square, you can right now. So, if I would never jump in square going for 10 or 15 or 20 cents. You got to make a buck in it. If you're day trading it, you got to make a buck at least, because the risk is just so high.
All right, Dennis, we'll let you go. Just a major leak here in the S&Ps, as predicted here. It's down $10 off that pre-market high. I don't even think you're going to get a shot now at 37.75. You're going to have to find an intermediate level in the 26.30 handle, and that's what I'm going to be doing as soon as we get off here. Also, Dennis, real quick, have you ever binary option trading? You've never done anything as far as those binary goes, correct?
No, I don't trade options as much as right. I used to trade a lot of options back in 2000s. Like I said, I use some different strategies. I trade options against the stocks, market maker type strategies there, but it's a different game now. And I'm just not a big options trader. That's why we bring Nick on the show, talk options to you on Tuesdays. I'm your equities guy. I'm your stock guy. So I'm not going to give you any advice on any options here, other than, on some, maybe some bigger stocks, but I'm not going to get into binary options or any type of option strategy. It's not my gig.
Okay. All right. We'll let you go here. We're going to stay on for just a few minutes here. In the chat, we have a new person coming in here. And Halim Haddad is asking about BHVN. And I see the news me on this one, Spencer. It doesn't look like they're really liking the news.
The news from this morning that both the co-primary regulatory endpoints in 2 pivotal phase 3 trials were achieved. So simultaneous endpoints achieved in BHVN.
Well, I guess they were looking for a little bit better news than that is really the only thing I can say. They whacked this thing down to $13, it looks like, is your pre-market low, and you got a nice recovery back up near 20. So I guess the bad news is it's down $5.34. The good news is it's off that $13 low here. So let me take a look at the daily charts. We're showing you here what we did in the pre-market action. We always like to take a look at the dailies and try and get a longer term perspective on this one. Well, that 13 just absolutely took out anything. So I think if you want to try and re-enter this stock, the former all-time low was at 17 even. You had a couple daily lows of 17 even, 17.21. So see how it reacts if it gets down to that area. If it looks like they're gunning for the pre-market low, then you'll have to use some half and whole numbers. But big overreaction on that. In order to get back into the lower end of yesterday's range, you need to get up all the way to 24.67. So not liking the news so far here in shares of BHVN. If there's any other stocks here in the Google chat or in our pre-market chat that you would like to take a look at, I know one that was mentioned quite a while ago that I did not get to cover was Disney. I know ICF is but looking at that long term. Bad day on Friday, but here you are trading up $1.84 at 100.38. Let's see what we can get from the pre-market session. Pre-market high, let me give that to you, is 10067. Let's look at the dailies here. And what is yesterday's high? Friday's high, 101.11. So if you're looking for a little extra on this rally here, I'd like to see this get up to Friday's high, 101.11. Above that, 101.64. But I don't know. Something tells me if you're looking to put this in long term, I guess $100 has always been a level. You've had to take some heat down to 96, but also we go into reverse over the next couple days here. Friday's low was not that far away. 98.45 was the low. 98.54 was the close. So Disney trying to stabilize here over $100. ICF is looking at Dropbox. Only 1 day of trading action here, trading at 29.88. Hard to give you levels. I'll go to the 15-minute chart here to give you a little different perspective. You got to spike up to 31.60 on Friday. So we'll see if you can get back and take out that level. Pre-market high so far. I see it trading at 29.98. Let's see what your pre-market high is in Square. Just popped over 30. If you want to use 30.38 as a target, that would be your pre-market high as we speak. GERN, I think, do we have some news on that last week? Do we have any more news on it today? Trading up 70 cents at 634. I say this is just kind of a continuation of a little run this stock has had. Spencer, you see any other news on it?
Nope, not from today.
Okay. Wow. What a run here from $2. I guess if you're looking for an area, 6.68. That was your high on Thursday. Really weak in the close at 526. You are trading above Friday's high. So really the only reference number is 668. And that was Thursday's high. And we got some people asking here about Micron, a favorite of Dennis's here, looking to add it to his portfolio. I don't know if I could do it after this. I mean, PE, yeah, but price action, no. Getting a pop up $1.63. Let's look at the pre-market trading in Micron. This had a really nice run. You did get over 56 in pre-market trading. You did get to 56.43. You're off that now, so use that as a target on the upside if you're playing this from the long side or attempting a short. Friday's high is considerably above that, I believe. Yeah, Friday's high is way up at 58.80. So instead of worrying about the highs of the move of this one at 61.72, I'll be looking at that close from Thursday. That was the day after the earnings that had a close at 58.92. And then on Friday, it couldn't get back to that area, only had a 58.80 high. So 59, that's a longer term number, but I expect a lot of resistance there if, in fact, we do go into a rally mode. DC1 asking about AVGO. And, boy, as of yesterday, I would have told you great support near 240. 240.06 was Wednesday's low. Friday's low, 240.41. So anywhere near 241, 242, that looks like to be real good support. Trading up at the pre-market, trading up $5 nearly at 247.44. Your pre-market high. Someone definitely wants to sell this stock at 48.50, 48.60. Even though not much volume is traded, you have 3 15-minute highs of that area, and now you seem to be struggling at 47.50. Of course, this stock has had a lot of news with it, with being involved trying to get Qualcomm. So a lot of news. 46.72. That's Thursday's high. Really going to rally mode. Wednesday's high was at 250.59. All right, that looks like we are done with symbols here. So that means we're done with Stargazer pops in here with FedEx. FedEx, once again, bad looking move on Friday, closes near the lows, getting a nice pop. So 29.48, trading up $4.16. Got to have some overhead supply on this one. Day of earnings, I believe you traded 258 and traded down all the way to 230. So I think you might have some sellers on this rally. Pre-market high stands at 234 even. Let's see how that looks on the daily charts. Now Friday's high is way up at 38.74. So get through that pre-market high. Thursday's close was 36.27. I would use that as a intermediate number. I had a Friday's high at 38.74. Okay, we are out of symbols now. Spencer, you want to wrap up today's show and preview what's on the docket for Tuesday?
On the docket for Tuesday is Nick Shaheen. Obviously, he's with us every Tuesday. But that's it for our show today. Thanks to Ian Weiner for joining us. Thank you to all of you, all those of you who joined us at premarket.benzinga.com and youtube.com/Benzinga TV. We'll be back with you folks tomorrow and through the rest of the week. Joel, you had a great weekend. You got through the show. I know you're a little bit tired from your partying, but you made it through.
No, not yet. Saving that for next weekend. Michigan Wolverines.
Okay.
Is it okay if I go to San Antonio on Monday and Tuesday there?
I'll ask the chat and I'll see what they say. To TBD if it's okay for you to go. But that's it for us today, folks. Have a good rest of your day. We will see you on Tuesday.